Alright, so I wanted to provide a alternative perspective to those in FITFI that are looking to potentially DCA at the next bottom. Now, I did just make a FITFI video on personally where I do plan on re-getting back in the market at 35 cent. Go check that video out if you are looking for my standard analysis with moving averages, momentum indicators, oscillators, all of that good stuff, fractals, M pattern breakdowns, etc. But for this video, we're going to be starting off with a blank chart, and I want to do one of my favorite types of videos, and this is microdosing the altcoin charts or the Bitcoin charts through a different perspective that you probably haven't seen before, and that is Heikin-Ashi candles. Now, I can almost guarantee if you watch a FITFI YouTuber, no FITFI YouTuber has talked about the Heikin-Ashis. I might be completely wrong. I don't watch any crypto YouTubers, so I haven't even, YouTubed it to check that was the case, but I'd be very, very surprised to find other crypto YouTubers talking about Heikin-Ashi candles when it comes to FITFI. So I'm going to provide my perspective on the markets in this video, and let's jump right in. So number one, why would you use Heikin-Ashi candles? Now, if you look at regular Japanese candlesticks, you can see how they operate is they open at the previous close of the previous candle. It's very, very simple. They open where the previous one closed, they have data traded, and then when the next one opens, it opens exactly where the previous one does, and that is basically it. With Heikin-Ashi candles, it's a bit different, but first of all, let's look at the Japanese candlesticks before we can truly appreciate how great Heikin-Ashis are. If you look at the candle body colors by themselves, are you able to identify whether an uptrend or a downtrend? Well, I know I wouldn't, because all I see is, you see a sea of green, we're in a bullish uptrend, right? Oh, now we're red, now we're green, red, green, red, green, red, green, red, green, and it's all up, down, up, down, up, down, up, down. You don't have like a set color scheme letting you know that we're moving bullish in one direction, and this is where the Heikin-Ashis come in, because Heikin-Ashis, how they operate, and I'm not going to fully explain every single detail about Heikin-Ashis. I'm not going to explain how they're calculated. I'm not going to explain how to trade them, etc, etc, etc. I do have an educational playlist with 13 videos in it. If you do want to learn how to use Heikin-Ashi candles, I do have a Heikin-Ashi video in there that will teach you everything I know about Heikin-Ashis. It will teach you the background of them, why they're used, how they're calculated, all of that good stuff. But for the sake of this video, I'll explain in 10 seconds or so. Because the Heikin-Ashis open at halfway through the previous candle, it takes more bullish momentum to make a trend continue in a bullish uptrend. And when we're in a downtrend, because they open halfway through, which means they open slightly higher, it takes a lot more bearish momentum to keep pushing things down. So what does this mean in layman's terms? Well, it simply means if you're looking at the Japanese candlesticks, they can get faked out to the upside or the downside very easily. If you look at the Heikin-Ashis, they don't really get fake outs. You can see the only fake outs we've had is this one red candle as we started the uptrend. You can see these two red candles as we started this uptrend, and the two up here as well. And you can see this one as we started this uptrend. So out of all of the data that we've got, we've only got 1, 2, 3, 4, 5, 6 candlesticks that don't perfectly talk about, the uptrend that we've got out of 77 pieces of data. So the Heikin-Ashis aren't your be all end all. It's just an interesting perspective. Like, I wouldn't necessarily recommend to long the candles and then short and then long and then short as soon as you see one red candle. And the same here, if we've got an uptrend, you see two reds, I wouldn't short as soon as you see that. I wouldn't short as soon as you see this one. I think Heikin-Ashis are great to pair with what you believe is going on in the market, and to pair with other charts like the FITFI chart that I just went through. So like I said, if you're looking for an alternate perspective as to when to DCA the perceived absolute bottom on FITFI, I'd say waiting for the reversal on the Heikin-Ashi candles would be perfect, because let's just look at what we've got going on so far. Well, if you bought the first time the Heikin-Ashis went bullish, and let's say, we recognize when we start turning up from these bottoms. So if we do start, reversing and putting in green candles, we will ignore the first signs of a downtrend unless we see, let's say 3 red candles. So let's say we got in on FITFI down here at 12 cent, and because the Heikin-Ashis were green, we traded it all the way up to, well, technically 38 cent. But when would we have known when to sell? Well, as you can see, we started putting in these red candles down here. The red candle closed at 29. Like I said, I would personally maybe wait for 2 or 3 candles. So if you wanted to be conservative, you could have bought at 12, gone all the way up to 38, realized that the trend is starting to curve over, and as you put in the third red candle, you would have sold at 28 cent after getting in at 12 cent. What happened after that? So we broke bearish. You would have been sitting on the sidelines waiting for the Heikin-Ashis to turn green again, and as you can see, they started curving around. We found a very, very rounded bottom down here, and then we started putting in our green candles. So in my opinion, I think these uptrends are very, very easy to spot. They've played out pretty much perfect every time. So I would have entered at 26 cent. Like I said, you would have waited for at least 2 or 3 red candles, so you would have ignored this fake out, and you would have rode this all the way up from 26 cent all the way up to 65 cent. When would you have known when to sell? Like I said, we're going to ignore these 1 and 2 red candles, so we would have simply just sold the third time that we see a candle. This is 12 hours after we start heading into a downtrend. So once again, you would have bought at 26 cent and sold at 57 after topping out at 65. Not a bad trade if you ask me. So you sold your FITFI at 57 cent. You want to get back into the market. When do you get back into the market? Well, you can see you had your first 2 green closes coming in at 51. Yeah, so you can see we had downtrend. You had your 2 green Heikin-Ashi candles, so you would have waited to the third opening, and this would have come in at 50 cents. So it says 50 cent, but it would have been more around the regions of 51 cent, just because they obviously they close at 31, and then it says the price is, you know, a cent or so cheaper, but it's actually just the same price. It just keeps it down at this region. But nonetheless, like I said, you would have sold at 57, you would have got back in at 50. That's more than a 10% discount. You would have been able to get 10% more bang for your buck if you were re-entering FITFI. So far, perfect uptrend here, perfect uptrend here, and you got the perfect downtrend right here. So as the trend went bullish again, you would have got in at 50 cent. Like I said, we're gonna ignore the first 2 red signs, so we're only gonna enter after the first 3 reds. So you would have actually exited here. This one doesn't seem as good because you would have got in at 50 cent and you would have sold at 60 cent. That's still a 20% profit. I would have taken that. And at which point you would have sold almost the exact bottom, and then you would have waited for 3, or you would have waited for at least, you know, 1 or 2 consecutive green candles before you did jump into the market. You can see an odd one here, red candle, 2 greens, and this is where it doesn't really work out, because this is the only time where the Heikin-Ashis went over green and then they started turning down red. In my opinion, after we did turn green, I would have sold as soon as we started moving back down red. So you could see you would have got in at a 65 cent and left at 63 cents. So most of the time, how does this work? You can see if we extrapolate how I would have personally traded using these Heikin-Ashis, you would have got out on the third, so you would have made 127% profit on this one. To the downside, because like I said, we're trying to make sure that we get better price targets as we leave the market. Let's see, you would have got back in after 3 consecutive green candles, so the next ride up to the upside would have taken you up 97% before you sold after these green candles. The next rally to the upside after you would have sold would have given you a 19% return. So far you've got 127% trade, a 97% trade, a 20% trade, and the last trade that we most recently done would have been down 3%. And I say the last trade that we most recently done, I haven't actually previously checked out the Heikin-Ashis on FITFI. I love Heikin-Ashis. If you go through my channel, you'll notice a lot of the time I cover Heikin-Ashis. I really do like these. They don't work on some cryptos, so bear in mind if you're learning to use Heikin-Ashis, don't expect them to work on every time frame. Don't expect them to work on the 4 hourly for every crypto. Some of them work better on the daily for some cryptos, some of them work better on the weekly, some of them work better on the monthly, some of them work better on the 4 hourly, and etc. You always need to do your own due diligence. I checked out the chart before this, and the 4 hourly time frame seems to define this. So What are we seeing right now? We're seeing a sea of red, and you can see this in the volume. We're very clearly in a downtrend. So would I try and catch the falling knife on FITFI before we start putting in some green bullish candles? I would absolutely not. So this is the perspective that I wanted to give you. Like I said, I personally do plan on getting back into the markets. Let me find where I plan on buying, because let me reset my chart to where we were at the start of the video. And I said most recently, if you want to watch my TA video on my other TA for FITFI, I would have personally got down here at 35 cent. And obviously we're coming down to that level, so I may very potentially look at getting in at 35 cent. Until then, I would also be keeping an eye on the Heikin-Ashis and seeing potentially if we do come down to this region, if we start putting in some green candles, if we could be having a bottoming signal. So I hope you enjoyed this alternate perspective. If you are looking for FITFI analysis, I do cover it from time to time, so my channel should hopefully find some value for you. Like I said, hopefully you found value in this FITFI video, giving you an alternate perspective on how to trade FITFI. We're clearly in a downtrend right now. At least according to the Heikin-Ashis, I would recommend trying to catch a falling knife until we do see a reversal in these. So like I said, hope you found value in this. As always, not financial advice. Cowboy out, most importantly. Peace.